If you are collecting OAS right now, there is a number that every Canadian retiree needs to know before this tax season closes. That number is $95,323. That is the new 2026 OAS Clawback threshold. And if your net income crossed that line in 2025, the government may already be calculating how much of your pension to take back starting this July. This is not speculation. This is confirmed CRA recovery tax policy for the 2026 benefit year. My name is Joseph, and welcome back to Canada Pension Guide, the channel that helps Canadian retirees understand their pension rights and protect every dollar they have earned. If this is your first time here, please subscribe right now, because what we discuss on this channel is information that your accountant may never think to mention. Before we go any further, I want you to stay with me through this entire video, because a few minutes from now, I am going to walk you through a specific line on your tax return that CRA uses to calculate your clawback. Most retirees never look at this line carefully, and that single oversight can cost hundreds of dollars per year in unnecessary pension reductions. We will get there. But first, let us make sure you understand exactly what is happening right now in 2026. The OAS Clawback. The government officially calls it the Old Age Security Recovery Tax, and for the 2026 benefit year, the threshold has been set at $95,323 of net income based on your 2025 tax return. For every dollar your net income exceeds that amount, CRA will reduce your monthly OAS payment by 15 cents. That rate does not change, 15% above the threshold, every single year. Let us put a real number to that. Say your net income for 2025 came in at $108,000. That is $12,177 above the threshold. 15% of $12,177 is $1,226.55. That means CRA will recover approximately $1,227 from your OAS over the next 12 months. Divided across 12 payments, that is roughly $152 less in your bank account every single month, from July 2026 through June 2027. For a retiree on a fixed income, that gap is real. That is real money leaving your household. And here is why the timing matters so much right now. Your 2025 tax return is either already filed or needs to be filed before the April 30th deadline. Once CRA processes that return, they lock in your net income figure. That figure determines whether the clawback applies and by how much. If there is any room to reduce your net income legally, through deductions and adjustments, that window is either closing or already closed depending on when you are watching this. Now, what many retirees often overlook is this. The income CRA uses to trigger the clawback is not your gross income. It is your net income, reported on line 23600 of your 2025 tax return. And that number can sometimes be reduced through legitimate deductions. RRSP contributions made before the March 3, 2026 deadline, union or professional dues, certain carrying charges on investments, and deductions for spousal support payments can all lower your line 23600 figure. If you are working with a tax professional, ask them directly. Ask them to look at line 23600 and tell you whether anything can bring that number below the $95,323 threshold. That one question could save you more than $1,000. The document that confirms what CRA has on file is your Notice of Assessment. Once your 2025 return has been processed, your Notice of Assessment will show your official net income. That is the number CRA uses. If it is above $95,323, the recovery tax will apply beginning July 2026. The form most retirees should also review carefully is their T4A slip, which reports pension, annuity, and other retirement income. Make sure every figure on your T4A matches what has been reported on your return. Discrepancies can trigger reviews and delays that affect your payment timeline. Now I want to speak directly to those of you who are close to the threshold. Maybe in 2025 you took a larger RRSP or RRIF withdrawal. Maybe you sold an investment property. Maybe you received a severance, an inheritance, or a one-time lump sum payment. Events like these can push your net income above 95,323s in a single year, even if your regular retirement income would normally keep you well below that line. If that happened to you, the clawback for 2026 may apply even though your income will likely drop back down next year. The system does not adjust mid-year. It runs on the prior year's filed income. That is why one unusual year can create a full 12-month clawback period. And at the higher end of the scale, if your 2025 net income reached approximately $157,490 or above, CRA may recover your full OAS benefit. That is the upper clawback threshold for 2026. If your income lands in that range, your entire monthly OAS payment may be reduced to zero for the July 2026 to June 2027 period. This affects a smaller group of retirees, but it is important to know where that ceiling sits. Now I want to stop for a moment and hear from you. This community is built on real conversations from real Canadians across this country. So here is my question for today. Which province are you filing from? And has the rising cost of living in 2025 and 2026 affected the real purchasing power of your pension? Drop your province and your thoughts in the comments right now. I read every comment personally, and your responses directly shape the topics we bring to this channel. Take 10 seconds and let us know below. Now let us talk about the Guaranteed Income Supplement, or GIS. Because some of you receiving both OAS and GIS need to understand how 2026 recalculations work. GIS is income tested separately from the OAS Clawback. It is recalculated every July based on your prior year income. If your income dropped significantly in 2025 compared to 2024, you may actually qualify for a higher GIS payment starting July 2026. If you lost a spouse in 2025, your income picture may have changed significantly, and you may be eligible for the allowance for the survivor benefit. These are conversations worth having with Service Canada directly, and they are subject to your individual eligibility and application approval. For 2026, the maximum monthly OAS payment for Canadians aged 65 to 74 sits at approximately $727 per month, and for those 75 and older, it is approximately $800 per month, reflecting the 10% permanent increase that applies to that age group. These amounts are indexed quarterly to the Consumer Price Index, so they may adjust slightly throughout the year. The clawback is calculated against your full entitled benefit, whether you receive a full or partial OAS, based on your years of Canadian residency. Now let us move to your action steps, because understanding the clawback without acting on it leaves money on the table. Here is exactly what I want you to do this week. Step 1. Log into your My Service Canada account at canada.ca and check your OAS payment details. Look for any notices related to the recovery tax or benefit adjustments scheduled for July 2026. If you do not yet have a My Service Canada account, set one up today. It takes 15 minutes and gives you direct visibility into your pension file. Step 2. Locate your 2025 Notice of Assessment once it arrives and go directly to line 23600. That is your net income as filed. If that number is at or above 95,323s, contact a qualified tax professional and ask whether any legal deductions may reduce that figure through a T1 adjustment request. There is a process for this, and it is completely within your rights as a taxpayer. Step 3. Confirm your direct deposit information is current with Service Canada. Any clawback adjustment will affect the amount deposited to your account beginning in July. You want to make sure your banking information is accurate so there are no delays or complications when your adjusted payments begin. My Service Canada Review, line 23600 on your Notice of Assessment. Direct deposit confirmation, 3 steps. Do them this week. The Canadian pension and tax system is genuinely complicated. The thresholds shift, the rules layer on top of each other, the forms multiply. And for many retirees, it can feel like the system rewards confusion. But here is what I want you to carry with you as this video ends. You are not at the mercy of this system. Every retiree who understands how the clawback threshold works, who checks their net income carefully, who asks the right questions before the deadline, is a retiree who is protected. Knowledge is your most practical financial tool in retirement. You spent decades contributing to this country. You paid into CPP. You built a life here. You earned these benefits. And you deserve to receive every dollar you are entitled to without confusion and without unnecessary loss. That is the entire reason Canada Pension Guide exists. Not to create worry, but to make sure you finish every video more informed, more prepared, and more confident about where you stand. If this video helped you today, please share it with a friend, a spouse, or a family member who is collecting OAS. One share could genuinely save someone real money this year. And if you are not yet part of this community, subscribe now and turn on the notification bell so you never miss an update that could affect your pension. I am Joseph. Thank you for being here with Canada Pension Guide. Stay informed, stay protected, and I will see you in the next one.